All right, so first we're going to look at something called circular flow. And the idea is that there's a circular flow of income and a circular flow of output. So it involves two principles. And so think about this in any economic exchange, in every economic exchange, in fact, the seller receives exactly the amount that the buyer spends. Now, I will say that we're kind of ignoring things like taxes for right now to keep it simple, but in general, that's true. And so basically what's happening is that goods and services are flowing from sellers to buyers in one direction, and money payments are flowing from buyers to sellers in the other direction. And this is what's called the circular flow. And so thinking about circular flow and profits, why is profit a cost of production? Well, it's because profit is the payment or return to entrepreneurs for the risk that they engage in, that they incur when organizing productive activities. So just be aware of that. Profit is a cost of production. Okay, so this is what it looks like visually, right? So at the top, we have product markets, the markets that you and I are typically engaged in, buying things at stores and whatnot. And then at the bottom are factor markets. So these are, most of us or all of us will at some point, if we haven't already, participate in the labor market. But there's also the markets for land and natural resources, markets for capital, and markets for entrepreneurial activity. So that's what the factor markets are. They're the markets where the factors of production are traded. Okay, and then on either side we have businesses on the left and households on the right. And so with this diagram, we can kind of see how money and then goods and services flow in the circular flow model, right? So we have the products market up top, right? Again. And in the products market, businesses are making goods and services that they are selling to households. So that's the purple arrow going over to the right to the households. And then in exchange, again, households pay for those goods and services with money, right? And so that's the green arrow going back to the left over to businesses. So that's the product market circular flow. And then on the bottom is the factor market circular flow, where households are providing the factors of production, labor, land, capital, and entrepreneurial activity. And in exchange for those factors, businesses pay households back for those things. So in terms of income, right? So wages for labor, rents for land, interest for capital, and profits for entrepreneurial activities. So this is the circular flow diagram. And again, product markets are the markets in which households buy goods, and the factor markets are where businesses buy resources for production. Now, we need to define what total income is here, and it's basically the yearly amount that is earned by the nation's resources or the factors of production. So it's the money or the value that's exchanged in the factor markets. So this includes wages, rent, interest payments, and profits received by workers, landowners, capital owners, and entrepreneurs, respectively. We also need to define what final goods and services are. Pretty self-explanatory. These are just goods and services that are sort of at their final stage of production. They're not transformed in any other way into other products. And these are the things that you and I buy at the store, right? Those are final products, final goods and services. So here's a question for you. Why must the dollar value of total output equal total income? Because that's really what we're talking about here with the circular flow model. And the answer was kind of given away already earlier, but it's because that every single transaction simultaneously involves an expenditure and a business receipt, right? And so like we said earlier, every economic transaction the amount of money the buyer pays to the seller is exactly the value of the output or the product that the buyer purchased, right? So, of course, again, we're ignoring things like taxes and other complications, trying to keep it simple here. But that's basically what's happening and why the dollar value of output has to equal income. Because, if you just thought about a very simple economy where it's you and your roommate and you're trading things, your roommate sells you a video game for $6. Well, that's the value of the video game to you, and in return, he or she gets $6, right? And that's an income to him or her. So that's basically what we're talking about here with the circular flow model.